Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 22nd, 2024, and we're diving into the latest earnings report from Simpson Manufacturing. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Simpson Manufacturing, a leader in engineered structural connectors and building solutions, has just released their third quarter results for 2024. Let's break down the numbers and see what they mean for investors.
Revenue and profitability overview. Let's start with the top line. Simpson Manufacturing reported net sales of $587.2 million for the third quarter, a 1.2% increase year over year. John, can you shed some light on this?
Absolutely. Despite the challenging housing market conditions in both the US and Europe, Simpson managed to increase their net sales slightly. This was driven by a favorable product mix and new customer wins, particularly in Europe. However, the operating income margin decreased to 21.3% from 24.2% last year, reflecting higher operating expenses.
And what about their earnings per share?
The earnings per diluted share came in at $2.21, down from $2.43 in the same quarter last year. This decline is primarily due to increased operating expenses and a slight decrease in gross profit margins.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. The gross profit margin decreased to 46.8% from 48.8%. What factors contributed to this?
The decrease in gross profit margin was mainly due to higher factory and overhead costs, as well as increased warehouse expenses. Despite these challenges, Simpson is focusing on aligning costs with market conditions to improve profitability. They've also revised their full-year outlook, anticipating a decline in U.S. housing starts, which will impact their future performance.
How is the company planning to navigate these challenges?
Simpson is working on cost-cutting measures and optimizing their operations to better align with the current market conditions. They expect low single-digit growth in U.S. housing starts in 2025, which should provide some relief moving forward.
Segment performance and strategic initiatives. Let's delve into the segment performance. How did Simpson's North America and Europe segments fare this quarter?
In North America, sales increased by 1.0% to $461.4 million, driven by a favorable sales mix and contributions from recent acquisitions. However, the gross margin decreased due to higher costs. In Europe, sales rose by 1.8% to $121.2 million, benefiting from increased sales volumes and favorable currency translation.
Speaking of acquisitions, can you tell us more about their recent strategic moves?
Simpson completed the acquisition of Monet DeSauw and Quick Frames USA, which are expected to enhance their product offerings and market reach in North America. These acquisitions are part of their strategy to strengthen their position in the construction industry.
Financial health and cash flow. John, let's discuss Simpson's financial health. How does their balance sheet look?
Simpson's financial position remains strong, with $339.4 million in cash and cash equivalents. However, their total debt stands at $465.4 million, with $75 million outstanding under their revolving credit facility. The company is managing its debt levels prudently while continuing to invest in growth opportunities.
And what about their cash flow?
Operating cash flow was $102.5 million, a decrease from the previous year due to higher working capital requirements. Despite this, Simpson is maintaining a healthy cash flow to support its operations and strategic initiatives.
Key takeaways. In summary, Simpson Manufacturing has shown resilience in a challenging market environment with a modest increase in net sales and strategic acquisitions to bolster their market position. However, they face headwinds with declining housing starts and increased costs. John, any final thoughts on their investment prospects?
Simpson remains a solid player in the construction industry with a strong balance sheet and strategic growth initiatives. While there are short-term challenges, their long-term prospects look promising, especially with the expected recovery in housing starts in 2025.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Simpson Manufacturing's performance in the comments below.